Dirk, should we move to you now? 10 minutes, please.
That's right. Well, thank you very much, both Charles and Stephanie. I've got a couple of bullet points and a couple of charts that I'd like to show, which will first be about what I like about the report. And that's basically two things. First of all, the report highlights the need for a more inclusive development path based on productive capacities. And I find that is very important, particularly in the light of what happened 10 years ago, when there was the Brussels Programme of Action, which had a number of action points, but where those action points were highlighted that particularly emphasized the need to increase social expenditures, both in LDCs and by donors. And I think that has created sort of a development thinking that it's easy to relieve poverty by delivering aid, as if you relieve poverty by giving a little bit of health, a little bit of education here. Whereas this report is much more focusing on the longer term determinants of poverty reduction and sort of productive capacities, growth issues and so on, which are the drivers of very important at that stage of living standards, by and large over the longer term. Of course there are periods where their living standards are increasing when there's not a little bit of growth, but by and large over the longer term. So that's one issue that I very much like, and I hope that that's something that will resonate strongly in the May or June, May meeting in UNCTAD LDC 4. The second issue, which I very much like, is the emphasis on policy coherence. And so you move away from just focusing on aid as the fundamental pillar of development cooperation towards other pillars, and I think that is that's what I like. I have between parentheses for development. So there are a number of references to policy coherence in the report, and I think it's very important to emphasize it's policy coherence for development, because it's all too easy to see development leading to policy coherence, so that countries might be interested in climate change issues or security issues or other issues in their own right and use development spending for that purpose. And I think we need to make sure that that at least the policy coherence is done in such a way that it helps development and poorer countries, so that any spending, additional spending on climate change helps poorer countries. So I like that. And I think we should also compare something that we've done as well as thinking on how G20 countries could support poorer countries, so the G20 and development agenda. But there's a slightly different emphasis there. So what we have with the development agenda in the G20 is they focus very much on the pillars of growth within a country. And there's very little focus on how G20 countries link into poorer countries, such as through trade, investment, links and so on. And there's very little on that, so how the core policies actually link into to development, and how the external policies link into development. On the other hand, this report actually focuses primarily on some of the core issues, but doesn't necessarily take the poorer countries' interest as a starting point. It's very important to think about all these other issues, and not just aid, because almost any economic policy in developed countries has spillover effects on poorer countries, and they can be big, they can be large. And I've just looked here at, and it's primarily model-based. Others are maybe from a different calculation. But here it looks really at sort of the core policies by the G20 countries, for instance, fiscal stimuli packages, or their the financial regulation, and their global rebalancing, renminbi appreciation, and so on. What impact might that have on poorer countries? And the effects that can be quite big, actually. I mean, these are based on one particular model, but maybe different models will be slightly different outcomes. But I just outlined that these effects are very big compared to some of the sort of the development policies in country. So it's important to think about policy coherence and to think about all of the other areas. Now then I've got 3 issues where I think the report could have been strengthened, or where you can think about perhaps in the future about some issues. I think the first thing to highlight is that the report highlights issues such as systems, paradigms, architecture, mechanisms, particularly in the support structure. What I also like to see is a country-specific focus, and that different countries need very different things, and we need to have, of course, take as a starting point that their own policies, institutions, and policies matter much more than what the developed community has on offer. You can think about sort of correlations of growth rates in the G20 or OECD with growth rates in LDC. In LDCs, and there's about 2/3 of the variability is from their own growth rates, policies, and institutions, and about 1/3 is due to external growth rates. So primarily we think about what are the growth policies in poorer countries, how can they be strengthened, and then to see how do all the policies and action points that you've highlighted, Charles, how do they then affect poorer countries. And with all of these, there are political issues, there are specificities. For instance, on DFQF, duty-free quota-free, I mean, Europe already gives those duty-free quota-free, but it is maybe primarily aimed at the US. If the US gives duty-free quota-free to all LDCs, that would then also include Bangladesh, because so far it doesn't do that, for particular garments, then of course Bangladesh would gain a lot. But there might be some others that have gained from previous preferences in African countries, in maybe Uganda or some others that were exporting similar products that would might actually lose out from that. So there's politics in there. So who do you support? Who is in the house of the architecture? Who is outside it? And even within the house of the architecture, there are pluses and minuses. Then there are issues about rules of origin. I think we need to look at it in much more detail. Who benefits from what? And last week the European Commission announced its new proposals on the rules of origin, and we need to work out whether it actually is enough to benefit LDCs, and who actually within LDCs benefit from that. And with all of these, I think with most of these issues, we can think about specific country links where we need to focus on in more detail. The second main issue is one about which I picked up in the summary of the report, the strong focus on commodities, and including on managing commodity price volatility. There are at least two other ways of dealing with it. The first is what Stephanie's dealt with, so that's basically shock absorber schemes. But another issue could be, if you're so hampered by commodity price volatility, then get out of commodities and make sure you get into manufacturing and services big time. And I like to have a much bigger focus on that, and I've got a chart on that. Maybe I should show that now, actually, because maybe we looked at slightly different data. But what I looked here as WDI data on the share of services in GDP and the share of manufacturing in GDP or value added. Again, for LDC as a group, this for LDC as a group, so there will be huge differences within it. But the one thing that we do notice from 2000 is that the share of services and the share of manufacturing has increased. Maybe in GDP, not maybe as much as we'd like it to have done it, but there is at least some changes there. And what we also know from development, generally, I think the one thing is that richer countries have a higher share of services in their GDP. So they need to at least focus on services. And there are interesting opportunities. There's tourism, which can be employment intensive. There's interest in ICT and Rwanda and so on. Lots of other areas that we can look at. Manufacturing as well. I mean, export processing zones. The Chinese are very interested in building export processing zones or special economic zones. Could they be leveraged in so as to get more development in poorer countries? So I think that is an important issue. The final issue I come back to is this is where I think is a very important pillar which is missing. which I call maybe business or economic opportunities or private sector or investment. There is a pillar is on finance, but it highlights debt issues, which are very important, and aid, which is very important. But there's much more to it as well for LDC. There's private sector investment, including foreign direct investment, but also local investment. There are sovereign wealth funds to be leveraged in from the richer countries. There are institutional investors, and there are economic opportunities. And I'd like to just finalize with that chart, where maybe I have a sort of a fundamental difference of view. In the report, there is one picture on profits, which goes sort of with an increase in foreign direct investment. There's an increase in profits, and that's more or less seen in a bad light. Sort of increase in profit remittances from LDCs. I take actually the opposite view. I think it's actually very useful to now see increased opportunities arising in poorer countries. There is economic growth happening. 7% or 6% of growth in LDCs has happened, so that maybe there's not been a structural transformation that we'd like it to have, but there are increasing opportunities. These are opportunities that are much greater than investing in U.S. treasuries or Irish debt. I think it's very good to highlight the economic opportunities and to highlight the potential for investment from not just developed countries but also the emerging markets. And profits, to show that investment can have a profit, is good. Now, of course, the onus is also on the country to make sure that those profits are reinvested in the country, so to have a good investment climate and so on, and to focus in productive capacities, infrastructure, skills, and so on, all the things that Charles has highlighted. But I think that fundamental pillar on private sector development, which complements all the other pillars, I think would need to be highlighted as well. Thank you.
Thank
but
you.
I like the report.